The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, folks. Basil Chapman. Good to be back. And very interesting session today, especially after Friday's session. And a couple of things I just wanted to get to real quickly. Here at TFNN, we're always we like to talk about the best of things. And certainly we try to make each program that we do the best of what we can do. And I was away Friday. One of the reasons was it just turned out, it was very unusual that it happened, but it turned out that my wife was free, that it turned out also that the Boston Symphony Orchestra had an early morning concert rather than Friday evening. And it was just remarkable that it all worked out. I wasn't even sure that it would work out. It turned out that it worked out. And we went to a most extraordinary concert, one of those concerts that you talk about for years and years and years because it is so magnificent. I mean, there was really no other way to do it. That was with Andres Nelson's and the Boston Symphony Orchestra, and did a Bach, which led into the Berg Violin Concerto. There's a whole history that goes with it. I was very interested in Alban Berg, written in 1935, and then 1937, a piece by Shostakovich, Symphony No. 5, an extraordinary piece, and absolutely the word extraordinary should be capitalized. I don't even know how to explain it. But the performance, especially since Nelson's is the new, it's a few years now, Boston Symphony conductor. He's young, he's in his mid-30s. He had a history of Slavic history, so this goes back to his roots. He was a viola player in the orchestra, became a conductor and then principal of the Boston Symphony. And it was just a magnificent performance, just the whole thing, but especially the Shostakovich. And one of the reasons why I wanted to mention it was it was probably the highlight. It's coming on tomorrow night as well. There's another performance here in the Boston Symphony in the Boston area. So if you're able to get to it, I don't think you'll be disappointed. A little strange, the Berg, Alban Berg piece. For the time, it was contemporary, used atonal music, but a beautiful violin. The violinist was superb. And so I just thought I'd mention it because historically, I want you to put into the context of markets. This was 1935. This was right in the middle of the Depression, but it was in Russia. And in Russia, Shostakovich, his Symphony No. 4, he was really almost put to death. This is what happened to artists in that particular period. They were almost put to death. And this really resurrected him. And the irony is that the piece is all about mocking the infrastructure. I mean, he puts in a march. They must have loved the march, except the march was put into the key and the way it was, and it never ever finishes. It just starts off and you feel great. And the next thing you know, it's kind of modulated and gone to another. It really is incredible. So I wanted to talk about that. I wanted to talk about it for my subscribers. I showed a chart, and I wonder if I can show that here, if I can just get to it. Give me 1 second. I think it's worth looking at because it's very interesting because, there it is. It puts things into perspective. Here in the Boston area, we've had an incredible construction boom. And the construction boom, there it is, has pushed housing prices up, but it has been very selective. And it is the rate of increase, and what people, analysts had said, was the lack of inventory. So we just had a shortage of houses for sale, apartments, etc., and property generally. And now when you drive around different cities, you hardly see empty land. I mean, just here in Newton, hardly even land that I thought would be there forever. Even the Boston College bought is in the process of buying land that was really mostly conservation land here in Chestnut Hill, Newton area, Brookline, Newton, Chestnut Hill, 26 acres or something. Everything is going. Everything's for sale. So here I show residential construction in Massachusetts, but look what's interesting. The big rise in 2004, I think it was. Yep. Can barely see it. Let me just check it out here. Yeah. And then what happens is that you got the big spike up. And now, in fact, we're way lower. And what it says is residential construction in Massachusetts, and discusses, and this is what's interesting, construction is from Boston Globe yesterday. Construction drops amid restrictions on home building heading. This is the heading. And this could be a sign that we are looking at to gauge the increase in home prices and the reasons behind the high prices. Bunch of things going on. Bunch of things that sometimes are peripheral to the actual index or focus that we would normally have. So you've always got to look for that. So meantime, I've got this 10-minute chart up of the E-minis, shows all these different patterns. Remember the Chapman wave pattern that says a failed arch pattern can come back, and if it retests successfully without breaking the left side low, it could rally sharply. If it rallies sharply above either a moving average of importance or a gap or a peak, it can go to the very next peak. In this case, the E-mini went from the low that was being established at 6:30 this morning, a.m., that's Eastern time, down to the 2082 level, I believe, suddenly started to run, and it broke above and closed sharply above the 2088 high that was formed at 4:20 this morning. And now look what we've got. We've got a left side, let me put it in here, a chance at least, of a left side, then a right side, price time match. The plumb line is not the usual plumb line, but it is also based on this series of this Chapman wave inside wedge target line. And it says around about 12:30 today, 12:30, 1 o'clock, we should be testing 2094.50. A failure would be a close below 2088.50. So we're going to be watching this real closely. All right, now let's go to the next chart. Take this away, right there. USD CAD, this is the US dollar Canadian dollar currency pair. Look, it is almost in leg D in the monthly chart. It has to go to 1.3. I love these decimals. There's the reason why I had to stop trading the currency pairs. For the Chapman wave peaks and troughs, you've got to count each to the penny. And this is 0.0001. And what happens is it's got 5 digits. So look at this. You go from the high. Oh, this mouse is a little difficult, so let me grab another mouse. I like little mini mice. There we go. At 1.34558, it just has to go to 34559, and it starts leg D in the monthly chart. Think about this particular peak with a quick A to B and then a pullback and then a C, quick C to D. Is that very often after the D, you get more of a pullback than usual. Okay, but the weekly chart says if it goes to that high, it's either an A, brand new A, or a continuation pattern F. Well, F is negative and A is fabulously positive. So we're going to be seeing what happens. I don't trade this. I'm just looking at it. And what's really interesting is you got a deflection from almost the high right here in the weekly, in the daily chart, in a V-shaped pattern, left side, right side, price time match. It still has up until the 26th to get to the high that was made at one point. This is the one, 1.34558 on the 29th of September. So it's acting beautifully, but it's getting into a little area of resistance. I'm going to get into the dollar right now because there's a direct relationship. The dollar has made a new recovery high. It has the pattern leg, body, and now it's starting the neck pattern, and that's G/B. What's really important about this is that 140 starts leg C in the monthly chart, but the monthly chart, unlike the US dollar Canadian dollar currency pair, what we're looking at here is quite a lot of time. Look, the high that was made was way back in March of this year. So this is a good, 8, 9 months? It can't be. It must be 7 or 8 months. And that means this is a very important month coming up, November. And what happens is very often when you get the cup formation, unless you powerfully break the left side high, which is 100.39, you have to close in the 101.70s really to say that this is basically a brand new leg, if it's now, leg C, rather than E/F. C would be very positive. F says, hey, start being careful. But this is the area of resistance that we're looking at. We've already taken out the 100, the 99.99 high of April, because we're at 100.30 in the dollar. USD, this is the dollar index. So the MACD is at a flattish level, but still positive. Stochastics at 86% in the daily. But the weekly chart is at 93%, and the MACD is just starting to expand. So this is a very important time. I had a couple of emails asking about gold over the weekend. Well, I still don't see gold doing anything, not just yet. I would assume that 1,040 to the 1,028 200 period exponential moving average I've been talking about for months and months, as a target, actually it's really years, that I said that there's a good chance we're going to go down to that 200 period exponential moving average, and we're not quite there. We've got another 40 points or so to go. So I'm suspecting that the dollar is close to some kind of a rest period, and that gold is really getting closer to where it could bounce. But where would it bounce to? It could bounce right back to the 1,060, 1,080, even 1,090 area. Something spectacular would have to happen in the whole commodity index to see us get to anywhere close to the 1140s in gold. Something really, it has to become a currency of fear. Okay, a question in the Dan. Yo says, my 200 EMA is at 956. Well, I don't know what to say. Format exponential moving average input 200. No, my 200, that's where my 200 is. Oh, you know what? Let me just see. The SMA. Are you sure you got the EMA? Because the SMA would be a little bit different. I don't really want to put one in right. Yeah, why not? Now let's just check it out. So insert. No, I don't want to do that right now. I want to go to the numbers. The Dow is up 19 at 17,842. S&P is up 5 at 2,094. The QQQ, or let's put it this way, the comp index is up 16 at 5121. What's really interesting is that what I discussed over the weekend when I sent out my charts for my subscribers to be looking at, I suggested, actually I've been talking about it for most of the week, that the Qs are the new economy, the Netflix, the Amazons, the price lines, the areas that have been taken, just leapfrogged over previous technologies. And the old economy, the New York Stock Exchange, is lagging together with the IWM. So the question is, will the IWM rally like it often does at the end of the year? Low cap stocks? I'll talk about that when we get back. Basil Chapman, Dow's up 60.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back, and let's just go through a couple of things that I want to look at here. I want to look at the TLT holding very well earlier on. Let's see. Yep, it's still holding at 120.66. Up to no great shakes. Yes, it's doing okay. It's in leg B, peak B. That is. Let me just do this here. There's your peak A. Here's your peak B. And the week, I just think yields are right now stuck in a trading range, a very narrow trading range. Now let's go to the TLT. So I did that. I did the dollar. I did let's see, euro, EUR, USD. Yep, going down to a lower low. I think it's going to retest that low right there when the dollar tests high. Then it should be testing the low that was made, I think it was March. Yep, March, the week of the 20th. That'll be 104.706 in the euro dollar. And I'm missing a couple of things. Haven't done crude oil for a little while. I had a question about that. Yep, there's crude oil. Oh, it did make that spike to the bottom to retest, and a successful retest so far. 39.65 with a continuous contract. Let's go to the USO. Most people have the USO as a chart. Yep, there it shows you that. Oh, wait a minute. This is a little different. Didn't make a low. 1281 was a low on the 16th. 1261, wasn't it? Yeah, 1281, and then 1282 by a penny. So we're going to be watching this because this is exactly this is the chart pattern that says if there is going to be a rally, it has to happen real soon. And USO, which is the United States Oil Fund, has to, at 1306, up 13 says, no good. It has to really get to the 1343 to 1352 area to show that it's making a U-shaped pattern to be able to sustain a move to the upside. Possible, but it needs to do that. So what did I say to subscribers today? I said, I'm looking for a doji-type candle today And let's just go to the Dow chart right here that we always look at. Move this over. A doji type candle today, and then a downish move tomorrow, a rally possibly Wednesday, and into the half day Friday. That's kind of the scenario that I'm looking at, and we'll see what happens. So here's a couple of questions that we'll deal with. I had one question over the weekend. Someone got the timing perfectly. I haven't looked at it this morning yet. I haven't had a chance. There. Someone had the timing perfectly to short IMAX on Friday, up in the high 38s or low 39s there. The high was 39.01, so it must have been high 38s. It's trading now 37.93. What I'd said is great timing on a near-term position, number one. Number two, it's got to be a little careful. The weekly chart is still very strong. The monthly chart is right in the middle. IMAX, of course, is they make those films, those dramatic films in 3D and 4D, whatever it is, with the sound and everything. They have it over here at the Museum of Science in Boston. Always complain about the Museum of Science. It's not their fault, but it's just me complaining. And my complaint is always this, that a Museum of Science should be science. The moment you walk in, you should be able to tell the footsteps. You should be able to tell the impact, the weight, everything. There should be measurements. And I mean, with the technology we have, the only thing that's missing is imagination. And I just find they are very unimaginative. They kind of stuck in the air. They have one little section that they'll spend time on. It actually has improved a little bit, but I don't think it's good. I really, same thing in the Brooklyn Science Museum. But, you know, when I see that there's an opportunity to demonstrate, especially to young people, something is so not just linear, but something that is so broad that you can get their attention with movement, physical movement. It's unbelievable what you can do. And I just don't think that these guys do this. They do what at least my imagination, they should be doing. And it's not cost, it's imagination. Really, some of these things are so inexpensive, they could just do it. Okay, so IMAX. Yeah, boy, I got that out, didn't I? IMAX is at 37.95, down 17 cents. Short-term, great trade. But I said, you know, I got to watch carefully. I'd lower my stop. Most important thing is that the 9-period moving average of 38.40 is important, but I would say just above, somewhere in the 38.67. If it bounces back to that, I just say, you know what, the trade is not quite working for me. Either get out with a little profit. In this particular trade, I'm going to suggest you don't take a loss. Okay. The other thing is that the 120-minute chart, I just glanced at it, had a failure pattern which says that the 37.79 200-period moving average, and then the major low of importance is 37.33. That's the low of the 11th. If that's taken out, I think you really do have a nice trade, because 37.22 is the weekly to a 9-period exponential moving average. I just got a feeling that this is more a short-term trade, that as soon as the market starts moving higher again, this should actually participate to the upside. This is the way it looks. But so let me put it this way. Very short-term, near-term, I think you're right. Shorter-term, going into next week, I'm not sure you're going to be right. And monthly chart says, if this thing can go above $40, it's going to retest the highs. If it breaks under 34, you're right, it's going to go even lower. Hey, I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're back, so let's go to the questions, email questions got here. Oops, a minute ago. I'll talk about this a little later in the week if I remember, about the South African expats, how so many have become are in key leadership roles. YouTube, PayPal, SolarCity, epigenetic cancer therapy, intelligent Mars robots, just goes on and on. My eyes popped right out. All right, so let's go to, and I only mentioned that because I'm originally from South Africa, and now we want to go to the questions. Questions, if I can find them, they just disappeared. There we go. Okay, VIX. The Goldman Sachs. Goldman Sachs, H pattern, remember I spoke about this the other day, has an H pattern, almost an island reversal there. Something's not quite right with Goldman Sachs. I don't think it's the leader of the group, funnily enough. I think it's going to be the leader of the group later from the monthly chart. It just seems to need some time out here, and it's getting that time out. So if you're short Goldman Sachs, I'd say put in a stop. It's at 190.23, down $1.24 on a day like this. It should actually be up. It's not. It's trying to test this Roman candle right here. If it starts to trade for at least 4 hours of it any particular day under 190.40, I think it's going to retest the low of 188.01. So you're going to watch it closely. It needs very quickly to make at least an M pattern or that H pattern, the Chapman wave H pattern, that becomes a very, let me draw it in here as a potential, a very positive, well, to be over there, a positive U formation. And if that U formation doesn't occur, you're looking at a problem. So be careful. If you're long, you want to put a stop just under today's low. I wouldn't be hanging around. It needs very quickly to get above 192.50. 192.10 is the 9-period moving average. Weekly chart says, yeah, it's just taking a breather after a big move up from the 200-period moving average. But I have to tell you, it just is not quite positive enough for me right now to give a recommendation. The question also asked is XLF. What about the XLF? See, this is different. This is a very nice single leg A to the upside. MACD is right on the cusp of either deflecting low. Remember, I talk about deflection and inflection. Inflection was when it goes right through a particular resistance. Deflection is when it gets repelled by that red line. So the slow moving average will repel the faster green moving average in the MACD, and it's the same as on, like it did here. It propelled it to the upside in the weekly chart back in July. So this is very important. The XLF is acting well. We have a bank stock in my in the Chapman wave in the opening call, my daily newsletter. We have a couple of longs, and we many longs actually, and we have shorts. And we did go long on Tuesday morning before the opening, the Dow Diamonds, and that's basically the Dow. So it's had a very nice run, but you know, it's a high price stock, so it needs to really get kicking to make a big percentage move. In the meantime, back at the ranch, what we're looking at is the XLF is really stuck between 2440s to 2420s is going to be the containment area on any pullback tomorrow or the next day. Okay, today, tomorrow. I'm thinking Wednesday at least will be a rebound. So that's going to be very important. You take that out, start trading under 24. This is a different, I have to look at this very differently. If there is a break to the upside, even by 1 penny of the 24.77 high of Friday, that extends the move up. If it's tomorrow, it starts leg B, and it indicates there's a good chance that you've got, you remember this rectangle pattern here? I have a specific Chapman wave methodology involved in it. It says within a shorter time frame, that's the 120-minute chart, there should be a move that takes you, and there was a peak C failure earlier on, but let me do this. Here we go. A, B, and then it should go have an inside, a Chapman wave inside buy signal that goes to a buy mode, going to a leg D, and it'll be underneath the previous high bar of this left side, and that means that the high of 24.97 is really important. It should get close to, just on or just above, and then start a pullback. That pullback's going to be very important. So in the meantime, it has a little more to go to the upside. That's the way it's looking at right now. So XLF looking okay. Actually, from the low it made at 1852, this is a fabulous move for the whole index. And the XLF was the S&P Financials, trading at 24.70, up 3 cents. So this is not bad action at all. The weekly chart suggests that it's really just taking its time. It's got a stair-step move of a big spike, pullback. Big spike, we're in the pullback phase. You want the next big spike, not just to go to 25.20, but to take out the 25.62 high, and all of a sudden you've got a different kettle of fish. I have to call it a weekly buy mode and suggest you're going to go even higher, longer. That means you will be testing the left side high of the monthly for an F slash, no, it can't even be an F. No, that has to be a brand new move to the upside. Oh man, we're in such an interesting phase. I thought about this a lot over the weekend. I'll talk about it more in a moment. VIX index, because that was the next question. VIX index, that's the volatility index. It really is showing selling pressure, even though it's in the mid-15s, 1563. Keeps getting repelled by the 9-period moving average in the daily. Made a peak D at 20.68 in the VIX index. It's trading way off now, 5 points off that high. And the weekly chart failed on Friday. It was a lousy candle. I just think there's buying pressure. And we will see some bouts of selling, but I think there's buying pressure. So VIX index right now, to me, below 16 suggests buying pressure. Below 13 is very intense buying pressure. Sorry, below in the 14s shows more intensity of the buying. And if it suddenly bounces by Tuesday or Wednesday into the 17s, well, it has to get to the 16s. 1665 is the 9 EMA, and 1701 is the 200-period moving average. If it is going to, the market is going to fail here, you will see the VIX index climb into the 18s. I just don't see it right at the moment. Next question is, What wave is it? Yeah, on the wave down, it is still in leg A to the downside. And the weekly chart is B, made at trough B, and a peak A, which might become an A minus very soon. So next question is junk. All right, here we go. JNK. I'd suggested a while back that we look at it because it tells us about the bond market. How can I put it? It tells us about the risks some people or some investors or funds are prepared to take in a very, very select area of junk bonds. What are junk bonds? Spider Barclays High Yield Bond ETF, 3526 down a penny. That's a polite way of saying it. Why it's called J&K is because this is, like the Federal Reserve is the area of last resort. I remember that here, studying that in my economics class back in South Africa. I always had questions about that, but be that as it may, what we're talking about, this is junk bonds are the exact inverse. It is the most speculative of the yields in the whole fixed income area. And it is testing in the H formation, lowercase h formation. It is testing the 3510 low of the 2nd of October. It made a low today of 3502, I said. Gosh, you got to remember the 3510. And it went to 3519 this morning, 9 cents away. And the weekly chart says, the other H has failed. What's going to save the day here? Well, what's going to save the day if the TLT, instead of being at 120.57 by Wednesday or Friday, starts to trade in the 119.20 to 118.10 area, that's going to suggest yields are moving higher. That's where we will get the test in the junk bond area. And the arch formation in the monthly chart, look at this huge arch formation, just suggests that at this point, it looks like yields will still be coming down. That's just the way it looks in the monthly. So that's not good enough because you want to go to the weekly. Weekly says, well, we're really near a test. The previous test failed with a failed H pattern. So if 3510 is taken out this week, you've got this week at the absolute latest next week in which to recover and then close above 3510. Just make it as simple as that. If it doesn't even get there but starts to rally, that's the J&K. That means it's being looked upon favorably. Yields, well, this is a little tricky because then that means that this is the high yield bond fund. That means the yields will probably go lower. No, this looks like the yield itself. Okay, yes. So what I'm looking at is that if J&K at 35.27 by Friday, by the close on Friday, if it's up in the 35.71 area on Wednesday, and then we have, of course, the Thanksgiving holiday, if it goes higher, 35.90 is the 9-period exponential moving average. It's only just barely touched it once in all the months since it broke down back in the week of the 5th of June. It's plummeted from the 39s down to the 35s. You know, for a bond fund, that is huge. That's huge. The 4 points, it's like 8.5%, 9% down. That's not good. So we're going to, it's good. Thank you for bringing it up. I'm going to keep my eye on this because it's telling us a lot of information. Just one real quickly. Yep, nothing there. Okay. I'll just refresh and we'll see what happens. 11111. And it is, okay, that's the chart you're going to send me. Good. So now there are a couple of questions. VIX dropping, but markets dropping too. Well, Confetti said a good thing earlier on. He said something about the Museum of Science, which I was going to get to, and then, of course, I completely forgot. Been there, Basil. I love those huge Van de Graaff generators, but unfortunately, it scared the hell out of my little nephew. The sound, you know. Yeah, I understand. But I have a whole thing about sound. I was in looking at a place in Greenpoint. No, was it in Williams? I think it was Williamsburg. Couple of weeks ago, and modern build just finished, brand new building, and pressed the buzzer to go in for the open house. And the buzzer was so loud. It was one of those screeching, horrible. It sounded like an alarm. Instead of a buzzer, a friendly buzzer, it sounded like an alarm for an absolute emergency. I turned around and I said to the guy who came down the stairs, I said, is that a friendly buzzer? Is that the buzzer? Is that the best you can do for the price? And I hate to tell you what the price of the place was. I said, what's the thinking here? He just shrugged his shoulders and said, that's the builder. You know, what kind of thinking do people, it beats me. It's like, why is Consumer Report, I'm going to rant today, why is Consumer Report stating categorically that Cadillac is getting, reliability is deteriorating instead of, it should have been spiraling to the upside. It should have been a mark of stature. It should have been, America, this is where we are. Cadillac, quality is finer than any European car, any car you can make. They've had time. I just find that infuriating. I would be firing the president of GM. I'd be saying, you're out of here. This is not good enough. It's not good. I mean, come on. You've had all this time. These accoutrements. It's so easy to make cars better and better. I know what it is. It's part of the price they can get for the goods. It's part of the unions. It's part of the whole thing that is against it. It's ridiculous. Got that out the way. Now we've got a couple of questions about PFE, which is Pfizer. Yeah, a couple of people was mentioned in the den as well. So my rant was the sounds should be really different. They should be awesome sounds. They should be generating excitement and not fear. They should give you some kind of an emotional quality, that's a curiosity quality, not a frightening. And of course, it should be for youth as well, mostly. Pfizer is down. Pfizer gap down. It's down 66 at 31.51. So now Pfizer is about to take over, or at least attempt to take over AGN. Was it AGN? No, it was Allergan. Yeah, Allergan, AGN. Allergan is down 7 at 305. No, Allergan. Yeah, it was. It's Allergan. Allergan. Oh, that's what I said in the den. Interesting that Allergan is getting a new face on life. It dropped quite sharply. Why? Because it has the Botox. It makes Botox. Okay. So now what we've got is a stock that is Allergan has pulled back 7 points. It's still within this trading range. I don't do this. I used to do it years ago. I don't do it anymore. Once the story is out and it's there, I'd be kind of done with Allergan. I still think it's going to go a little higher because of what's going on. But really, you're risking words that come out overnight or intraday. You could just see yourself, look, 7 points down today out of nothing. I'd stay away from this. Pfizer, I'd stay away from it. Now, what I discussed for a long time, I've been discussing the fact that my thinking is that the IBB is done. But that doesn't mean that individual stocks aren't going to be takeovers, because my thinking here, and I don't know the field that well, but I'm just looking at it as stocks and indexes. I think that the pharmaceuticals, the huge 50, 100-year-old pharmaceuticals, are going to be forced to take over biotech companies at prices they didn't want to even think about 3 years ago, and now those prices are 3 times higher. I'll be back. Basil Chapman, one segment to go. Dow's up 7.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks. Just want to do this for those traders amongst you. Look, this is a nice pattern. You remember, step move, spike up, pull back, hold some support. Spike up, leg C, pull back, trying to hold some support. Now we're looking at the E-minis at 2092.25 of 350. We want to see it pass 2093. And that takes the dashed line makes it a target. And where's the target? Comes in between 12:15 or it's a 10-minute chart. 12:10 and 12:20. Actually, 12:30 is the exact timeline. It says by 12:30 should be testing 20.094.50. We'll see what happens. We've still got a few minutes. Maybe we'll get it sooner. Okay, those are. Remember, peak D is what we look for. There's your peak D on the left, right over there. Whoops, gone. Okay, a couple of things before we wrap up. I have not a clue as to where we were just a moment ago because I've already done a bunch of charts and I've moved on. My mind has moved on, so we'll have to go. SMHs. That was the question. SMH is the market vectors semiconductor ETFs, Intel, Taiwan Semiconductor, AMAT, Applied Materials. That's interesting because my friend, the guy who has the played tennis with, who has the semiconductor company in the Boston area, he said, I asked him about it. He says, we're doing great. Great. I love that. He says, he works really hard. He goes into niche areas. He's an amazing person, an amazing company, because I don't think they've ever had a loss ever, any year. But he works really hard. I mean, he's traveling every other week. He's flying away. Okay, so I spoke to him, and I know from experience never to use whatever he says as a market indicator, because when you're in the business, you're just too close. And he said to me a while ago, Applied Materials, I'm a little worried about them because their outlook that they made public, it says that they're a little worried about the outlook. So I look at Applied Materials, and lo and behold, look where it is. Oh my goodness, this just made a leg F/B in the daily. Oh, wait a minute, is that is 1705, 1706. Yeah, I thought that. Okay, so this is E. This it's hardly likely to be a G. This is probably a B. Applied Materials is screaming from the 14s to the 18s. And this is one of the biggest of the semiconductor companies. So whatever they say, maybe that's based on that terrible move that it had from the 25s down to the lows of the 14s or 13s, 1425, and now it's at 18. So maybe they're looking out. All I can say is I never do that. I always look at the charts, and my charts are suggesting we went short the semis just recently, but we immediately switched. We just missed going long. I can't remember. Yes, we did go long. The 300% long, we have done fantastically on the short side of the semis over this year, 2015. We did take a small loss. I believe it was a small loss. And that says, so this is F/A and then G/B. So let me just put it this way. If the semis are rallying so strongly, and it's just getting to the 200-period moving average, this is one of the best companies, regardless of what they say, it's at the 200-period moving average resistance. So I'm looking at the SMHs, and Intel came out the other day and said they are looking at raising the dividend. I think that's what they said. So Intel, look, here's Intel. Intel looks, it broke out. I have to consider there's a chance on the daily that this is an A. There's a chance it's an F. Of course, I have to then look at the weekly. Well, the weekly is in C. So far, I'm looking at Intel, and I think higher prices. Make it simple. It looks like they're going to be high prices. Stochastic at 84, MACD is good. So I'm looking at any pullback here to possibly go long. We'll be trying it. We haven't quite got the price. If the price is right, I'm looking at going long the SMHs for a rally into mid-month of December, something like that, or maybe the end of December. So here we are. We've got the bell. The bell is rung, and we're going to be going to the next program. Great program all day through. Listen closely. I think there are some fabulous words of wisdom in all the shows. And we've got the VIX index at 1538. If it drops further, the market goes higher. If it starts to bounce to 1590 or 1603, the market pulls back. Be back tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.